Hi, this is Pat with Energy Solution Partners sharing with you our energy market view on Saturday, March 22nd. Keep in mind there is a risk of loss when trading commodity futures and options. Well, I want to start out by saying I've been kind of quiet here over the past month, just trying to sort this market out here, and a lot of outside factors come into play that I think are outside of the energy field itself, and some big picture economic items taking place that has us a little concerned. Um, Start out by saying, for the most part, I guess our recommendation is being pretty well neutral or hedged up. I'm going to go through some technical pictures with you, looking basically at charts. Going to show what appears to be kind of some bullish items, looking at the diesel chart itself, but then taking the outside factors in, I've got some items that concern me, I guess. With that, I guess I'll just point out what we're looking at and not really making any recommendations one way or another here. First of all, we'll look at a daily diesel chart, and for those that may be new to looking at some of these charts or wondering what I'm talking about when I pop up a chart and daily chart, the vertical line here represents 1 day's trade. So this last line on the chart would be the last day of trade, which is Fridays, and so this shows you where the market opened at with the dimple on the right, all the other action that took place during the day from the high to low, and then the little dimple on the right there is where it closed at. As we look at this, I guess some targets that I've had in place here as we've been selling off. The first line I have drawn in here is the February 3rd low, which was at 296.60, and we did break down through that pretty easy, so that opened the door up to the next low, which would be the previous low on January 10th, down in the 290.50 range. Again, we did come down, we broke through that, and kind of opened the door up. I guess the next target from there goes all the way back to the November low, which is in the 283 range. But since that time, we have kind of put some bottoming action in here, and the way this is kind of rounded out here over the last couple days, each day's low has been higher than the previous day's low, which is a sign of some bottoming action. The other line I have drawn in here is the red line is the 5-day moving average, and that's a pretty short-term trend line. But if you look at each day's trade going back to the 1st of March here, you'll notice we stayed below that 5-day moving average all the way down, so pretty solid trend line. We poked above it a little bit here a couple times, but we could not close above it and went right back down. But now that has changed here over the last couple days, where we have closed above this line. Although Friday's action, I guess, was kind of interesting because, like I said, we opened strong, we traded strong most of the day, but then right at the end it fell back, so we couldn't find follow-through buying on this. So even though we've closed above this 5-day moving average, need a little more buying action, I guess, to convince us that it's ready to stay up there. So that's one area that we'll continue to watch here moving forward. Now I'll pop up a weekly chart, and just like the daily chart, the weekly chart, each vertical line here is 1 week's worth of trade from the high of the week to the low of the week. And what I wanted to point out here is the stochastics, and again, this measures the market conditions when we become overbought, which if the stochastics get up in this area above this red line, that looks for the market to be in an overbought condition. Or today we've just moved into the oversold condition. If we look back here on this weekly chart, we've only been in an oversold position like we are now 3 times over the last 4 years. And again, a weekly chart has more meaning than what a daily chart does. So when I see us go into an oversold position on a weekly chart, it's usually a pretty good buying opportunity. If we look back, 2010, 2011, we did not see the stochastics drop into this oversold condition. We look at June 2012 here when we dipped into a way oversold condition, and that's the lowest that we see on this chart. Look what the market did from that point going forward. From June 2012 till we peaked in September 2012, we've seen a 70 cent a gallon rally in the diesel futures. Looking at the next rally, December 2012, bottomed out, oversold here. Look at where our futures were there. Had a rally again, going up 30 cents a gallon to February 2013. And then looking back to April of last year, moved into an oversold position here. Look what our futures did. We bottomed out here and we rallied 50 cents a gallon into August. So that's worth looking at here. We've just dropped into this oversold condition yet. Doesn't mean we have to rally right away, but it's sure has history shows us it's been a good time to make purchases. And getting away from the charts for a bit and just looking at some fundamentals, I guess we can't ignore this either, although I do think the market is kind of ignoring it right now. Looking at a lot of outside factors taking place. Diesel stocks, we remain at very low levels. We're below the 5-year average, and we've been tracking below this 5-year average for some time. And also on the days of supply, I like to pop that up because that not only looks at our inventory, it takes a demand picture into consideration also. And you can see our days of supply are running well below where we have been over 2012, 2013. So fundamental picture. Diesel, we are at some low inventories and demand is hung in there, so we do have some low levels of daily supply. With all that, I am sounding pretty bullish on the market here, but I guess now looking at some of the outside factors, and one of the biggest indicators that I continue to focus on is the copper market. And it's often been said that copper has a PhD in economics because copper generally trades up or down ahead of where a lot of the economic data comes. And if we look since the beginning of 2014 here, we've seen copper fall off quite a bit. We've dropped about 15% from where we opened the year at to where we're trading the lows this past week. Most of this drop has taken place here just since the 1st of March. Look at these big drops, and again, this is a weekly chart, but we've had some big drops here through the month of March, and most of this is being blamed on some economic data coming out of China, and there's been some bond defaults over there. And as the housing outlook in China looks to weaken here quite a bit, awful lot of copper that's used in building activities there, and so copper is just falling off the cliff. And whenever copper is weak, I cannot get excited about buying any of the energy commodities, and the overall economic data, I guess, is pretty suspect at that point. But with that, we did see some interesting activity here as we finished this past week in the copper trade. And again, this vertical line here represents the 1-week trade of copper. We did trade down quite a bit lower than where we finished at, but then it rallied on the last couple days of the week here and closed almost unchanged for the week. So that picture does potentially look like some bottoming action in that copper market. We need this next week of trade to confirm that. If we can trade higher this next week, then it will look like copper's put a bottom in, and we'll get more excited about adding to our energy positions here. But until that happens, I just cannot get excited about buying energy at this point. Just reflecting back on how copper trades in comparison to crude oil, and I put this together on a monthly chart, which I typically don't look at monthly charts, but I want to show what's taken place over the past few years here, matching copper up with what the crude oil trade has done. And if we go back to where everything peaked at in 2008 before the financial collapse, copper put its peaking action in April 2008, well ahead of where a lot of the other items did. As copper peaked out in April, crude oil continued to run higher till we peaked in July of 2008. Well, this chart is showing $140. Again, this is a weekly chart here, so it's not taking the full month's activity in place, and we know we went up to $147.50 before we did turn around. But copper peaked a couple months before crude, I guess, is the point that I'm trying to make. And at the same time, when we bottomed out in 2008, 2009. Copper put its low in December 2008, and crude oil didn't bottom until the next month, January of 2009, is when crude put the bottom in here, and both took off and rallied from there. Just a side note: the stock market put its bottom in March 2009, so the commodity trade was well ahead of where the equity trade was. But looking again at February 2011, we seen copper peak in February, crude oil a couple months behind it in May. So copper looks to be a leading indicator ahead of some of the other commodity items. So when I see copper make a big drop like it did, I get suspect, and we can see here right at the end what happened. Actually, crude and copper did peak at the same time, but you can see in comparison, the copper drop has been quite a bit more severe than crude to this point here. So that's why I'm kind of waiting for this copper market to turn around and watch that rally here, I guess, before I can get excited about some of the energy trades here. But with that, our energy story is set up, and the charts look pretty strong here. Recommending staying neutral till we see something happen on the copper. If you want to be in a speculative mode, there's some great ways to play this with purchasing some options. Options are relatively cheap. We can buy some options with upside payout in the 4 to 5 cent range, which if the market doesn't rally, for a lot of you marketers, that 4 to 5 cents can be absorbed in your margins pretty easy, as we know your margins always get bigger as the market is dropping. For any end users at all that are looking for coverage just to protect a budget, I don't think these are bad numbers to get in. We've had a nice drop here. I don't think it's a bad time to jump in and take some of those positions. But if you want to look at any strategies at all, feel free to give us a call, and we'd love to go over your individual situation. With that, thanks for listening.